This session will last for 90 minutes till 4:30, and then we will have half an hour break before moving to panel 2. And today, during the first panel, we will have with us 4 speakers who are all experts in competition and telecom regulation. We have with us Scott Marcus, who is a senior fellow at Bruegel, a Brussels-based economic think tank, and he's also the principal author of a net neutrality study that has been prepared for the European Commission and is about to be published soon. Then we have also William Lehr from MIT, who is an economist and a research scientist at the Computer Science and Artificial Intelligence Laboratory at MIT. And who has written recently a regulatory response for broadband paper, a response to the ETNOS report, which is behind the whole public consultation, which we are going to discuss today. Then we have Giuseppe Colangelo, who is a professor of competition law and economics at the University of Basilicata. And last but not least, Antonio Manganelli, who is a professor of competition policy and regulation at University of Lumsa, Rome. So before we open the discussion during this first session, I would like to make very brief comments about the scope of today's event. So as you know, there is exploratory consultation that has been launched by DG Connect on the future of the electronic communication sector and its infrastructure. And we have 1 month left of this public consultation, and the idea behind organizing an event during the consultation was to actually gather both academics and representatives from the industry to present their positions on the ongoing consultation. The consultation is divided into 4 sections, and before it has been published, there was loads of discussion already and very heated debate about one of the topics in particular, so basically fair share contribution. But the Commission rightly, at least this is the right part, didn't focus only on this topic, but have created a more wide public consultation that looks into the future of the electronic communications in general. But the question is whether it is forward-looking enough and whether it takes into account the complexity of the sector as it is today. So these are the 4 sections of the consultation. Consultation is very much driven by the political commitment of the European Union in general to have access to excellent connectivity for everyone, both consumers and businesses, the protection of net neutrality rules, and the idea that everyone who uses digital economy and relies on this should contribute to it in a fair and proportionate manner. This declaration and this political commitment is present both in the European Declaration on Digital Rights and Principles for the Digital Decade, as well as in the decision from 2022. When it comes to the EU digital targets, you can see that they affect not only the citizens, but businesses and public administration. So there are targets for digital economy in general as what it should look like in 2030. And this is the context in which the public consultation is taking place. So far, there have been a number of reports prepared on this topic, and they have been commissioned by either private companies or ministries, in particular the Dutch ministry. And we have now also some academic articles. If you read them, you would see that the positions are very, very polarized. And the idea here, again, is to kind of go beyond this polarization, because I think that what we want all is to have reliable and resilient networks that are good for everyone, and we want social cohesion. So rather than focusing on those polarized points of view, I think it's important to understand how can we find a common ground in order to reach the targets that the European Commission has prepared. And I think that maybe, I don't know whether we want to discuss today whether the targets in themselves are rational or not, or whether they are exaggerated, but I will leave that to our distinguished panelists. So my opening question to all of them would be, do you think that this public consultation includes everything it should? So what is in the public consultation? What is out? Is the public consultation biased in the questions that it has included? And is it forward-looking enough? So maybe I would ask Scott Marcus to open the discussion with his presentation. And at that point, I will stop sharing my slides so you can share yours. Thank you.
Thank you very much, Anna. I think everybody can hear me, and hopefully everyone can see my slides now. So the question that you raised is really an excellent one to start with. And clearly what we will be talking about today is really driven very much by the consultation. Yep. And why can I not move my slides forward? There we go. So I think the key question, I would say that the consultation covers a lot of ground, but it nonetheless is clearly problematic. To me, this is really a European Commission strategy document masquerading as a public consultation. And I think that'll be clear as I walk through my comments. Now, the consultation clearly implies certain things, and the fact that it's clearly implying them is already a problem because these are things that should have been asked as questions rather than made as statements. So a first one, or at least the first one that I'd like to come to is it implies that internet traffic growth is accelerating, especially due to video. Second point, that the traffic growth imposes costs on network operators. Third, that funding of broadband is challenging. And fourth, that content and application providers, called CAPs in a lot of the literature, especially when we talk about net neutrality, that they should be making payments to the European Union for the traffic that they allegedly cause. Again, the fact that these are so clearly implied in the consultation is itself a defect of the consultation. Now, if you look at the position taken by large network operators, as expressed through their association, ETNO, in 2021, the first four bullets are largely in line with what they're claiming as well. It's just that they want the payments to go to them, mainly through a negotiation process with CAPs, with content and application providers, backed up, if necessary, by arbitration over interconnection. So that's a noteworthy difference, but otherwise they see the diagnosis somewhat the same. So let's take the main points one by one. First, is internet traffic growth, in fact, accelerating? Now, the fact that traffic is growing is, of course, not in dispute, but it's also not surprising. Internet traffic has been growing year over year, every year since the commercial internet first emerged in 1995. This is not new news. There are good analyses that have been done, good forecasts. Cisco VNI used to do good forecasts of both the fixed and the mobile network. Probably the best mobile forecasts today come from Ericsson. And here you see my graph of some of the Ericsson data. And indeed, if you look at the level of traffic, you will indeed see that the traffic is expected to grow. But the rate of growth is not accelerating, it's declining. And that's also been the case for at least a decade. Probably it's been the case forever. I can't recall any time when it wasn't the case. So we don't have an acceleration of traffic growth. We have a slowing down of traffic growth. We had a bump as a result of the COVID-19 pandemic, but that's not relevant to the long-term trend. Okay, so traffic growth is there. It's not necessarily worse than it was before, but this question of cost, what's the linkage between the level of traffic and the cost? Not really raised at all in the purported consultation document. In the past, the traffic-dependent fixed network cost wasn't increasing. It was slightly declining despite the traffic growth. The total cost was declining. And the reason is obvious. We all know about Moore's law, the thing that means that if we buy a computer next year, we'll get more capability for the same price as what we would pay today. No surprise, and that's still going strong. The graphs on the left are things that I worked up 10 years ago, where the blue lines represent the growth of shipments of things like high-end routers and dense wave division multiplexing, exactly the areas where you would expect costs to be going up as a result of traffic. And the red lines are the unit costs per megabit per second of the same equipment. And as you see, they just about cancel each other out. And if you look at the total numbers, that's exactly how it works out. The prices were very much in line with the costs when you analyze them correctly. And by the way, 10 years ago, the network operators were making almost exactly the same claims. So again, so you really have to raise a question. Now, this is one area where the consultation might possibly generate some useful data, or it might not. At least some of the right questions are asked. Okay, now a third question, though, has to do with cost causality. clear implication in the consultation is that content providers are responsible for these costs and therefore ought to pay. That's an assumption. Now, I worked with some absolutely outstanding Toulouse economists 20 years ago, the LMRT paper, and there we were looking at access fees between network operators. The implicit model is that the content providers had their own network operators, which was generally true at the time, and the users had a different set of network operators. This basically is a two-sided market, but with some important differences. The two-sided market is the internet service providers collectively, together, not individually. And of course, their interests are not aligned. Now, the system has evolved since, and it's evolved in important ways. Today, large content and application providers like Google, like Facebook, also like Netflix, to a significant degree, they're their own internet service providers. They also make substantial investments in content delivery networks. Netflix and Google will provide servers to telecom operators, substantial investments that mostly get lost in the current discussion, and they make substantial investments also in long-distance fiber, including submarine cable. So all of this really needs to be reflected in the analysis. Another consideration, though, is what do we mean by cost causation? In any two-sided market, and the two-sided market is relevant in this point, nobody makes money unless everybody makes money. So essentially, you've got a virtuous cycle here, and it has to benefit all parties. Attributing cost to one side can be inappropriate. Rather, what two-sided market theory tells us is you want to maximize benefits by maximizing participation for everybody. Even in the seemingly simple case of telephone termination fees, there's a very fine paper by Jean Lafond-Tirole that argues that even there, the assumption that the calling party causes the cost is sort of backwards. If the called party didn't want the call, he would hang up. In very much the same way here, the costs for, let's say, viewing next Netflix videos, well, Netflix indeed wants to ship those videos, but the consumer wants to see them. And if both weren't brought together by the platform, nobody makes money. Now, do internet interconnection fees make sense? Well, we've had transit for a long time. We've always had payments there. 20 years ago, most experts would have assumed that payments between ISPs would be absolutely essential in order to enable end-to-end quality differentiation. That debate sort of quietly died. It died for a number of different reasons. Partly the technology was hard. Partly it turned out to be much cheaper and easier simply to increase the capacity of the internet rather than trying to prioritize. So the incentive for payments for peering, which is interconnection between network operators to connect their respective customers. I can elaborate on this later if you want. That largely went away, but it's still there in the background. Now, what we know also from the work that I did with Lafond and Tirole, and what you also see in a paper, a new paper by Julien Bouvard, is that those costs, any costs for peering, will tend to get reflected into the payments on both sides of the market. But how much of that actually flows through and to whom will depend a lot on the business models involved, especially the business models of the content and application providers. Anyway, as I previously said, if there's any sense to a price, it would be a price set to maximize participation. In much the same way, by the way, that in the two-sided market of broadcast free-to-air television, that consumers typically pay little or nothing, the prices are put on the advertisers because the elasticity on that side of the market is less. Now, a frequently raised point has to do with net neutrality. I would argue that contrary to popular belief, the net neutrality regulation in Europe, the open internet regulation, doesn't deal with interconnection. What it's mainly dealing with, and this is especially clear in Articles 3 sub 1 and 3 sub 2, is the relationship between network operators and consumers. The relationship between network operators, or between network operators and content providers is really there only to the extent that one of the recitals in the regulation says the practices shouldn't limit the exercise of rights of end users, for example, to access all content. And there's BEREC guidelines that expand on this a bit. One that relates to interconnection, another that relates to, again, measures that would impact the ability to access content or that would inadequately provide capacity. Now, there's an interesting point here. What do we mean by interconnection? To me, the connection between Google and Deutsche Telekom looks like interconnection. I think to almost everybody, it represents interconnection. The legal definition in the European Electronic Communications Code, it's not interconnection. It would be interconnection only if both parties were providing public electronic communication networks, services to the public. If you look at, for example, Netflix, they have a network clearly, but they're not providing communication services to the public. A last general point is, are these the only payments we should be looking at? What's often forgotten is that there's a major reform to corporate taxation that's underway, the so-called BEPS G20 reform, that would refine corporate taxation, mainly hitting companies, a large fraction of whose net worth is in intangible stuff that could easily be parked in low tax or no tax jurisdictions. That's what the profit sharing part of the BEPS name is about. And it's not small. The expectation is that it's going to shift taxing rights for about 125 billion US dollars per year. And the increase in tax in the minimum tax rate will result in about 150 billion in new tax revenues. And by the way, this will probably take effect irrespective of anything that happens in the United States. The IRA, the US IRA, already provides a 15% increase, not exactly compatible with this, but on balance, for various reasons, this will happen. It transfers many billions of dollars, and it's coming mostly from exactly the same companies that are allegedly underpaying. So trying to deal with these questions without approaching that is probably misleading. So a last point, or summing up, I'd say an honest to gosh, fair discussion, a frank discussion between CAPS and ISPs per se is not wrong. There was never a reason to say that zero was the only possible price for a connection between them. It's a convenient price, but it's not the only possible price. But it's also not so obvious what the right solution would be. I would say, having said that the conversation is needed, the Commission public consultation wasn't the way to do it. There are too many misleading or self-serving claims made where they should instead have been asking questions rather than making statements. But there's scope, there's real scope for genuine, unbiased fact-finding, and that remains consultation or no. I provided a little light reading. Since this is a university session, there'll be a closed book test as soon as the presentations are over. And with that, back to you, Anna.
Thank you so much, Scott, for your opening comments and for all the reading materials that you have suggested. For our audience, I would like to add that after the event, we will post all the presentations online, so you will be able to go through the sources that Scott has just suggested. And at this point, I would like to move to William and ask him about his view on the EU public consultation and whether there are any specific insights from the US that could be helpful for us in this discussion. William.
Can you hear me and see my slides?
Yes, we can. Thank you.
Hi. Okay. So I tend to talk too fast and tend to talk too long, and I will try and solve both of those problems today. First off, it's a real honor to be invited here. So I'm a US economist. My perspective tends to be pretty US centric. I'm very much informed here by my co-author and colleague and research partner, Volker Stockers at the Weizenbaum Institute. And the work that we did that sort of, led to us being invited to participate in this panel is a paper that was shown on the first screen that Anna showed, and that also there'll be a reference to. It's a paper that we wrote to respond to an earlier paper that was submitted in this debate by the European telecommunication network operators, referred to as the ETNO report, and was prepared by this group called Axon Partners. Certainly, evidence-based policymaking I think is a really important effort. Almost everything in fact, everything Scott Marcus said, I absolutely agree with, and I think is right. And I think that list of papers that he listed at the end and that kind of level of debate in this session, that's what evidence-based policymaking ought to be about. I think part of what we talked about today is whether or not this consultation actually accomplishes that. Yeah, so just very quickly, in the paper that we did, we looked at the Ethno report, which made the arguments that Scott Marcus lays out, and this story that video traffic is causing these very significant costs, that those very significant costs puts at risk the ability of the ISPs, the telcos, to do the broadband investment they need to meet the European 2030 goals, and that the caps, mostly US, the Netflix, the YouTubes of the world, are not paying their fair share of the usage costs, and that the best solution, the only solution that should be entertained, is some sort of mandatory payments from the caps to the ISP, some sort of transfer, and only something like that will be fair. Well, if you took what the Ethno report argued, they're not right as a matter of logic, theory, or the empirical evidence. It's not that those arguments maybe couldn't be made or considered seriously. It's that report doesn't do anything in this process but add noise. It's useless. I want to go in my remarks to keep them relatively brief, and we can certainly go back to the more detailed reasons why I think the Ethno report and those kinds of arguments are seriously flawed as have been presented so far, and address the last question. Does the consultation forward-looking enough? And I think the answer there is no, it's not, and it misses a lot of stuff. The ecosystem's changed and continues to change, and it's really important to think about framing policies that anticipate what that is. Everybody agrees that broadband is essential, but ISP access is not all that we need for broadband, and lots of other investors and entities upstream and downstream are necessary to make the investments that are going to be required to deliver the broadband that we need in the future, the critical digital broadband infrastructure we need in the future. Most of that investment is going to be private, which means it has to come in an environment that is market friendly, which means that it's not just access ISPs that are going to be making the investment, it's also very significantly the caps, the content delivery networks, the upstream ISPs, and the end users are all investing and all will need to invest. And when I talk about end users, that refers to a more recent paper that that Volker and I have written will be forthcoming later this summer. The point is, you want market-friendly, light-handed, not heavy-handed rate regulation is what's needed. The proposal of the mandatory cap payments, that's an example of heavy-handed regulation. Before you would even entertain doing something like that, you need a lot more analysis, a lot more evidence than has been in the record today. And the current survey is unlikely to get that. It may help you inform that question and point you in the directions of where you might find that information, but I would be highly surprised if the survey is going to get you that kind of data. It's also the case we're going to need a hell of a lot more resource sharing, which means we're going to need many more network sharing agreements, and that those sharing agreements are going to be taking place in an environment that is very fluid and changing. The architectures and the services are evolving, and cooperation and coordination are important. If we think the future is just going to be about delivering more TV to everybody, then why the hell are we investing in broadband in the US or Europe or anywhere else? It's about doing other stuff. And exactly what that other stuff is, we don't know, but it certainly is about building networks that do a lot more than just deliver a lot of traffic downstream. You're going to need a lot more active sharing, and that raises a bunch of other questions, like what is the new model for network neutrality in a world of 5G where you need to do much more network management, active network management, and we need to get away from the kind of idiotic arguments that launched the net neutrality debates originally and took us 10 years to get away from, which is that every packet or every stream of traffic should be treated the same. That obviously won't work. The biggest changes that are coming in next generation networks are going to be a shift of investment and intelligence and control towards the edge of the networks. We're moving from fixed to wireless. It's not that fixed networks and fixed facilities aren't going to be very much important. It's just that the last hop connections are increasingly going to be wireless for mobility, portability, interoperability, all those reasons. And to do those and make them work, you're going to need smarter edges, which means more software and control in the applications, in the devices, and more flexibility to manage that. It means that a lot of that wireless is going to be, and the network management is going to be small cells managed in smaller areas and a lot more capability for local customization. And that ought to be built into the network. The need for that and the ability to roll those services out is one of the motivations behind the single market push. And what that means fundamentally is end users and edge actors are going to own and control and need to be involved much more significantly in what the future of the management of these networks are going to be. When you go into shared tenant services, apartment buildings, when you get into people's houses and all this, you're going to be using and sharing equipment that's not owned or controlled by service providers, and certainly not by traditional service providers. There's going to be new types of service providers, antenna companies, neutral hosts, all kinds of different names that are going to be rising up, and you need a regulatory framework that anticipates who they are. Let's take a look at what is really the question about the European 2030 thing. The real issue here is how do we get the right kind of broadband to everybody that's affordable so that Europe has the digital infrastructure it needs. That's a real policy challenge. It's not about whether or not the usage costs associated with video traffic from caps are growing or not. It's not really about an allocation of surplus. In fact, if there is a real problem, it's a problem because there's a real critical, someone's not gonna be able to recover their costs. That hasn't been demonstrated yet, but that potentially you would need to show. The key questions are deploying and upgrading the capacity of broadband where it does not exist. That's really important. And that's where a lot of the investment is. And most of that investment is not about whether or not caps traffic is causing costs for the existing broadband services. It's not a usage cost issue. It's about building out new infrastructure and making it affordable, which means the second point's really important. You need to basically foster a market that's going to give consumers choice and competition options in a world where there will be shared infrastructures that have the potential, if not managed appropriately, to be bottlenecks. And exactly where those exist, those could be moving around, and you'll need a flexible regulatory apparatus to think about that. Some of the key questions, and this comes very much to what we're grappling with in the United States right now, is what are the right technologies and what are the right business models? In the US, we've just launched a $40 billion, well, we've not launched, we've approved a $40 billion program called the BEAD. It's a fund that basically is going to, is directed at putting fiber to the home of every broadband serviceable location in the United States that doesn't currently have it. That is just bad policy. You shouldn't, regulation rules that provide funding should not be choosing technology. It's a violation of the sound principle of technological neutrality as a policy goal. It also, I think, misses and obscures the question about what really is the right kind of architecture. And the right architecture, I believe, for solving broadband, especially in long tail last locations, is some hybrid solution. It shouldn't hardwire in a particular business model. There certainly will be a need for public subsidies, but even in solving those universal broadband problems, most of the investment's still going to have to be privates, which means that whatever you do in your design of a universal service program is going to need to take into account what are these other things are. You're going to have two big problems with the universal service subsidy program for Europe. You're going to have to figure out, where the source of the funds are. Is it going to be general tax revenues? And Scott Marcus raised, for me, first time, the issue about the changes in the tax laws, which are going to shift money from digital platform providers that are mostly US based towards Europe and provide a source of funds. That's a potential source of funds that could be directed here. There's also a lot of talk every time they auction spectrum off, what you might do with the spectrum proceeds or the digital dividends come from better management of our radio frequency spectrum, or potentially some sort of usage tax, and who should bear that? Do you do that at the level of broadband subscribers that may be watching, on 4 different TVs, unbelievable amounts of content, or do you do it in some sort of price regulation in the intermediate? These are things you could consider, but you need to look at. And then the next is the distribution of funds, the cost of providing service, and the affordability of end users. If you don't have competition, then you're really going to have to worry about how you're going to regulate, how your regulatory policy is going to afford affordability for end users. And if you stick to the 1 gigabit per service for everybody, whether they need it or not, that's going to affect the cost of providing services. And I think that's something we'll need to think about as we go towards 2030. So I think both of those are important issues. So just to wrap up, the ecosystem's evolving, and and there is a need for real regulatory reform. I think that is to basically figure out how we need to regulate more competitive markets, how we go forward with light-handed regulation. In the US, too often, the push towards market-friendly regulation is interpreted as just get rid of all regulation. The only way to get symmetric regulation is just get rid of the regulators. That's not what's needed here. What's needed here is better information and a measurement metrics capability so the market can make the right decisions, a capability to do enforcement when problems arise, and a lot of thinking from the people that are on this panel and elsewhere about what the options are, and real consideration of them, not the kind of fake news sort of nonsense that was in the Etno report. There are real challenges that need to get addressed, and I hope the rest of this panel takes care of them. Thank you very much.
Thank you very much, William. During the previous presentations, we have heard something about net neutrality, but net neutrality is actually not mentioned in the public consultation, although it seems to have been the driving force behind this public consultation. So at this point, I would like Giuseppe to make some remarks about that. And in general, what is your position on this public consultation? Thank you, Giuseppe.
Thank you, Renata, and thank you, Pierluigi, and thank you, the UI Center for a Digital Society, for inviting me and for hosting this seminar, this webinar on a timely, hotly debated issue. I hope you can see the slides. Is everything okay, I guess?
Yes, we can.
Okay, Scott and William already provided, I would say, a comprehensive outline of the debate and of the framework. I'm going to share with them the basic concern about the premises of the regulatory intervention. As a competition law professor, I have to disclose that I'm not a fond of regulation at all. And let's say, using this bunch of slides that are relying on a forthcoming ICLE working paper, I'm just trying to show that that apparently in the first share proposal, which is significantly lacking, the fact that the first share proposal is still struggling to address the very same fundamental question that we already raised in the case of net neutrality, that is actually whether a regulatory intervention is justified in the first place. So I have just literally 3 cents, and I'm going to see whether I'm able to address all these 3 points in this first round of intervention, otherwise the last one I will discuss later on. And so they are basically related to a broader view of the premises of this intervention, whether there is actually a market failure, whether we have evidence of market failure, why the net neutrality problem is relevant, because essentially, as I try to demonstrate, net neutrality is a primary driver of the current first share proposals, and apparently we are not learning from the mistakes about net neutrality. And about the third point is general remarks about the broad European industrial policy, the recent European industrial policy, and I'll try to find a way to find a thread, a red line that connect this proposal with previous regulatory interventions, such as in the copyright in the digital market, but also in the audiovisual media service. So just to start with the point related to the justification of a regulatory intervention, that is the basic premises of any regulatory intervention. We know that according to the economic literature, regulatory intervention is justified under specific and limited circumstances. The case of a regulation is normally situated within a framework that is the market failure framework, namely when free and unrestricted competition is unable to allocate resources sufficiently. And outside these hypotheses, competition is commonly accepted as the best regulator, as it has been empirically observed that effective competition leads to lower price, better quality, and innovation. So without a proper investigation, regulation run risk to negatively interferes in market dynamics, generating inefficiency, introducing artificial barriers to entry, deterring technological innovation. And at the same time, we have to take into account that calibrating regulation is extremely challenging. Although regulation is expected to be forward-looking, it may lack of flexibility, and it may introduce a rigid set of rules, which run the risk to reflect a static view of the market at the expense of its dynamic evolution. Moreover, if we take into account that it's consistent with the private interest and public choice theories, government intervention is often prone to the capture, run risk to being guided by the interest of specific groups rather than aiming at just promoting the social welfare. Well, if we look at the questionnaire that has been released by the European Commission to drive the public consultation, it strikes me the fact that the questionnaire is not asking whether a levy over caps or over OTT is needed. It is just addressing the question how this levy should be structured. However, within this battle of reports, we heard about different type of numbers, cost, investment. In the case at stake, the economic justification for regulatory intervention is at least questionable, missing as there is no evidence of a market failure to address. It seems quite the opposite, because if you look at the BEREC preliminary opinion, but also if you take into account the recent joint declaration of both the Dutch and German governments, it seems that there is no an evidence-based discussion on these issues. And so if we do not have a discussion on a fact-based problem, it is difficult to discuss about whether the tool is fit for the purpose. If we take into account the words used by the BEREC in its preliminary note, well, the current model has fostered innovation, growth in internet connectivity. It has promoted development of vast array of content application. According to the BEREC, the increase in traffic volumes has not altered this reality. The IP interconnection ecosystem is still largely highly competitive. Apparently, there is no proof of free riding by caps along the value chain. And it is even questioned whether the increase in traffic has translated into higher cost for telcos. I guess that if there is a debate on this basic of a regulatory intervention, it is legitimate to discuss whether the regulatory intervention is needed in the first place. Then there is the other issue, the other main issue that it has to be addressed. This again, it is useful to discuss these issues from the very perspective of the justification of the regulatory intervention. The European Commission, facing the advancing the first shell proposal, is going to address also the question represented by the questionable and the dubious compatibility with net neutrality, which is the main flagship initiative delivered by the Commission in the previous political term. The European Commission has been anxious to reassure that there is no going back on net neutrality, that is strongly committed to protecting a neutral open internet. However, there is a wide concern that a direct compensation from OTTs to ISPs could endanger the principle of net neutrality. And we probably have to admit that if not just on the legal perspective, but from the economic point of view, the first shell proposal is at odds with the net neutrality. Because we have to remind that the net neutrality moved from the assumption that broadband providers enjoy an endemic market power. And so the common feature of the net neutrality regulation is the introduction of no discrimination rule to ensure that all internet traffic is treated equally. In particular, as terminating access monopolies, ISPs are deemed to be gatekeeper for edge providers that seek to reach the end user. So when it comes to the economic literature, well, the economic literature has stressed that the consequence of net neutrality regulation depend on precise policy choices, how they are implemented, and how long run economic trade-off play out. Given the ambiguous effects of anti-discrimination net neutrality rules, the most controversial issues involve the supposed added value provided by an ex-ante regulation outright ban instead of a traditional ex-post case-by-case antitrust enforcement. Indeed, net neutrality introduced, at least in Europe, a blanket ban of practice that would not be per se antitrust violation. Against this background, the apparent need for a fair share proposal emerged as a result of the policy conflicts with the economic rationale of the net neutrality. By imposing a fees on OTTs, transmitting data above a certain threshold, the fair share proposal discriminates against some online players and against some online contents. As a net neutrality has been justified under the view that broadband providers are those who enjoy an endemic market power, as terminating access monopolies, it would be difficult to sustain an intervention aimed at restoring fairness in the relationship between network operators and content providers on the premises that the former suffers from an asymmetry of bargaining power. Indeed, under net neutrality rules, ISPs are assumed to have an insurmountable bargaining power. But in the fair share proposal, they are presumed to be powerless before OTTs. That's the reason why the net neutrality is a primary driver of a counter fair share proposal. Because again, we do not have to overlook that the existence of pay privatization between ISP and caps would have prevented the emergence of these claims. It could be argued that on one hand, net neutrality has tilted the balance in favor of large OTTs, and on the other hand, paid prioritization would be the efficient market answer to different content offerings. And if telcos are facing an uneven regulatory playing field, it's exactly because of net neutrality, which limits private negotiation, preventing telcos from monetizing their networks, discriminating among contents and application. Yet, instead of acknowledging that interfering with market forces was the mistake in the first place, and therefore this is the time to restore the possibility for parties to freely negotiate over the terms of content delivery, apparently EU policymakers are blaming the market again. So it seems that we are not even learned from the mistakes of the net neutrality regulation. Then, and this is probably something that I may address later, we may also find something in common between the recent fair share proposal and previous regulatory intervention that affects the way in which European Commission tried to address the so-called digital transformation and the potential disruption of legacy players. I don't know if I have enough time, and otherwise I may come back on this later on.
I think you could have still 2 or 3 minutes, but as you wish, you can either continue now or come back to this later.
Probably it's better to come back later. Maybe I need more time. Okay.
Okay. Perfect. Thank you very much, Giuseppe. So you have mentioned, you have referred to the fact that there are different positions among national regulatory authorities, but also William's paper has mentioned that I think there are different positions among MPs in the European Parliament. But this actually makes me wonder whether any potential problem that we are experiencing in this area is a true EU issue, or maybe some countries are affected more than others. So whether if it's more diversified on the national level, whether the EU response is actually, whether it's the right level at which to look for the response. But what I would like now to discuss with Antonio is first, net neutrality, to which Giuseppe has already referred, what's your take on that? But also the question of consolidation, because as we have said, net neutrality is not directly mentioned in the public consultation. It's definitely an important problem, but it's very much related to the uneven regulatory playing field to which Giuseppe has mentioned. But is it only the question of net neutrality, or are we experiencing uneven assessment of what telcos and OTTs do, and whether we can find any other examples, maybe in other areas such as merger assessment. So Antonio.
Yeah, thank you very much. Thank you very much, Anna, for inviting me, for having me here. It's always a pleasure to come back to, even virtually, to to Florence and the European University Institutes and meet up with very good and old friends. Yeah, I will share my presentation. And yeah. Okay, perfect. Do you see it? Yes, I think so.
Yes, thank you.
Perfect. So the point that you mentioned are very important and very relevant, and I will start exactly from the asymmetric regulatory playing field, or the uneven regulatory playing field that characterized, the regulation of large platforms and electronic communication service and network providers. So for my intervention, I transformed a bit both the title and the main picture of the conference, from the reshuffling the connectivity ecosystem to untangling the connectivity ecosystem policies. And I represented like all the ropes and different market actors, and I picked only the UI donors. So there is no advertisement for other companies. So pulling the ropes of the connectivity ecosystem with different desired policies, and also on the already existing policies. So in a way, forming a knot and or a tangle on the policies of the connectivity ecosystem, which I will try a bit to untangle in these 10 minutes, which is not, it's an impossible mission, of course, but I will do my best. I will start exactly from the existing policies that there are in the connectivity ecosystem, considering the ecosystem, so the whole of the electronic communication service and network and the information society content services. So the regulation of these two field is very asymmetric. As we know, the electronic communication service and network are subject to the electronic communication code, which in the last 25 years has put pro-competitive access regulation obligation on the big telcos, and causing at the end intense price competition in the market. So there is competition in the internet service service providers. And of course, next to that, there are the net neutrality rules, to the prohibition of commercial and unreasonable technical discrimination. While, of course, as we know, large platform regulation, until the DMA, DSA is entering into force, which of course will change substantially the regulatory scenario, because those are quite big and relevant piece of pro-competitive regulation for contestability and fairness. But until then, and for, let's say, the last decades, there was a soft regulation or a self-regulation which reinforced the size of the large platform and the market and bargaining power of these players, of these very important players. Of course, this is very relevant when large platforms provide services which are substitute with those of telcos and also media companies. And there, of course, the different regulatory burdens produce a very uneven regulatory playing field. But in those circumstances, there was an earlier adaptation of the regulation, for example, the Audiovisual Media Service Directive for the sharing platform, or the number independent interpersonal communication services in the electronic communication code. Anyway, the adaptation was partial, but was started a bit before. But this is not what we are looking at in today, because what we are interested is where the circumstances where a large platform and telco operator work as a complement. So of course, when for the role of internet service provider with the telco operator and the content application providers. Of course, they could be perfect or non-perfect company as complements, as Scott mentioned before, depending on the business model. So depending also on the cross price elasticity between the prices of the product that they're selling. So especially in particular, if caps as an advertising business model or a payment business model. But anyway, they are asymmetric complements, meaning that the ISP, the internet service provider, are bottleneck for content application provider, as Giuseppe was mentioning, describing very well before, because they have the material possibility to exert market power through non-price discrimination. So that's the reason, the rationale of the introduction of the net neutrality rules, which is still anyway very asymmetric regulation. It's a very asymmetric regulation for two main reasons. The first one is that in Europe, net neutrality was not, differently from US, net neutrality was not a market power leveraging problem. So because there were not there was not vertical integration of ISP providing their own contents, like happening in the US, where of course, this creates a very big incentive for the bottleneck, the company that controls the bottleneck to discriminate between its own content and other contents. In EU, there was not the case. So the problem was to address a discrimination issue between different caps. So for whatever reason, ISP could want to discriminate between different caps. And the reason is because caps could have different market power, different bargaining power, different availability to pay. Of course, the net neutrality want to tackle this. So, but basically wanted to tackle, and this is tackling a problem of discrimination between asymmetric caps by placing an obligation on ISP. And we will see there's an obligation and also an opportunity cost, because does not allow ISP to discriminate or anyway to differentiate between contents. The other reason for which neutrality is asymmetric is because most of the time content application provider has a so-called must-have content, which could be in a way considered a proxy of being a gatekeeper, looking from the relationship between ISP and CAP for those gatekeepers that, of course, are content application provider. So, like an example, of course, Google Map is a must-have content. No ISP could think of not providing to its customers with that content, because it's a must-have content. Just because of that, ISP cannot exert market power in the relationship with content application provider, even without net neutrality rules, because of the intense competition on the ISP side for end users, which the regulation has introduced. So, of course, cannot for any ISP, it's not possible not to have this content. Otherwise, consumer will slowly but with a very constant pace move toward competitors. And but on the other side, of course, in the this complementarity relationship, in this virtuous circle that was described before, must-have content drive also ISP connectivity demand. That's the relationship, exactly the relationship of this of complementarity between the two. And the question, I think, one of the pivotal, crucial question, and how much this should be accounted as a contribution to the entire ecosystem of their network deployment. That's one of the big questions if you want to reason in terms of an ecosystem. And my answer is that maybe too simplistic, but is that it depends on the capacity of ISP to monetize the demand increase. And according to me, the real question is not really what cost this demand increase would put on ISP, but rather how much ISP has the capacity to monetize this demand increase, regardless of the cost. Because of course costs are important, and of course change the scenario. But I think the very important question is about the capacity to monetize, and not really the cost that are translated. And this, of course, depends on the market, because as Anna mentioned, you mentioned there is a differentiated situation in markets also because the regulation is we have the electronic communication code is European, but we have very different implementation at national level by the national regulatory authority, which are in charge of the direct application of the code. Of course, there are harmonization and coordination mechanism, horizontal and vertical with the Commission, but still the regulation, if you look at regulatory remedies in different member states, they are very differentiated. But anyway, we can see that there is, generally speaking, very generally speaking, there is a lack of capacity of this to monetize demand increase for the two main reasons that we mentioned before. So that the competitive pressure created by the pro-competitive access regulation on the electronic communication service side, and the net neutrality regulation, for example, the prohibition of zero rating and other content differentiation practices, that place a cost opportunity. Here is where the cost opportunity is on ISP. Cost opportunity of not being able to monetize a demand increase. So according to my vision, this is in a way a regulatory failures, because there are two pieces of regulation that regulate a certain phenomena, not considering also the evolution of the market on the other side of the market, and not enabling the market player to have to monetize, for example, demand increase, and so to follow the market dynamic. So what are the possible way to tackle this? On one side, we could think about softening the regulatory asymmetry, so by decreasing regulatory competition intensity on the ISP side, so the ex-ante regulation, but also, as you mentioned before, the merger regulation, so the possibility of ISP and telcos to consolidate, of course, cross-country, but also in-country, because also in that, there was a very differentiated approach by the European Commission vis-a-vis telco operator and large platform. If you look at the past merger between large platforms, you see that the approach was very much different compared to the telcos. And also something that we can talk about, softening the net neutrality rules, for example, also with an interpretation which could be coherent with the current test, but giving the opportunity in a way to differentiate. Maybe, for example, if is the consumer that asks for a differentiation. That's something that could be, if you want, we can talk later, could be something that could be think as a possible solution to that without changing so much the principle of net neutrality. On the other side, the other solution, and what we have discussed before until now, is tightening the regulation on the relationship or tightening, or anyway introducing a regulation, the relationship, direct relationship between content application provider and ISP. And so that's where we go again to the transit fee. The transit fee, so the fair contribution, could have, I would like to highlight some of the possible pros and possible cons that this market solution could introduce, and we'll see at the end what is the general sensation, the general flavor that this lead to us. So the transit fee, of course, it's a good way. It's an efficient way to discipline data traffic, because there is actually a market failure, which is quite evident in the relationship between ISP and content application provider, is the fact that there is no incentive for content application provider to optimize traffic on the network perspective, while the optimization of traffic, of course, the dimensioning of traffic is only on considering only the caps side, so the profit side, which of course create an externality on telco. This externality, of course, is variable depending on the cost of traffic, but still there is an externality. And a transit charge would put some incentive for content application provider to efficiently dimension the data transmitted. So in economic terms, to internalize these externalities. So this is always true. This market failure is there, depending and variable with cost. But this is especially true, if I think, for the content which are not, which actually are not requested by end user, because also the narrative is saying, which is true, that at the end is not the content application provider delivering content, but is the users, also telco users, which are asking for content. This is not always true. There are quite a lot of content and data that are delivered without any unsolicited by users. For example, the content with where there is an automatic streaming, autoplay, and also all the advertisement. All the advertisement are data anyway that are sent to users, which the user does not request. Of course, this is part of the business model of large platforms, and of course, it's a very legitimate and efficient way to monetize. But still, there is some externality with advertisement that are delivered to the end users, and a transit fee would manage to internalize this in an efficient way. When we go to look at the transit fee, the effect on prices and consumer welfare, there are few papers on that. The one is very already been quoted, Julien and Bouvard, which is, there is a new version like 15 days ago they put on SSRN, and basically they're saying that a transit fee would produce a decreasing price for ISP services, and under certain circumstances, certain condition, a decreasing of overall price. So considering the price of the whole ecosystem, so the price that ISP are charging and the caps are charging, and an increase in consumer welfare. So this could say that it's an efficient way to manage this relationship. There is anyway some pitfalls on that, because of course, or anyway some element that we have to consider when assessing this policy solution. Decreasing price for ISP, which is of course derived from the fact that there is let's say a cost sharing mechanism, which is even more true when you have competition on the ISP side, intense price competition on the ISP side, meaning that there is all the fees are completely greatly competed away. So there is, if we look this policy solution in a scenario of funding new investment, of course, this could not be the best solution. And another characteristic in this model that it's nice to highlight is the fact that there are decreasing overall price and consumer welfare depend on the return to ads. So the ability, first of all, if you have a caps model with payment, direct payment, this is neutral. So all the decreasing in the ISP prices are passed as an increase in the fee of the caps. But if you have an ad business model, the positive outcome depend on the ability to indirectly monetize users. So if the ability is very high, as for all the big tech or very large platform, so we have a decreasing overall price and an increasing consumer welfare. In that circumstances, the consumer price is considered on the platform, on the cap side, the number, let's say, of advertisement, so the attention that the user has to pay for advertisement. But one thing that this model does not consider is the fact that it's considered the opportunity cost for attention, but it's not considered the opportunity cost for user of data transfer, because exactly the main driver of consumer monetization, the ability of platform to monetize consumers, it's of course the transfer of data, so the ability of monetizing data. And in this way, we would go towards let's say a good overall effect on consumer welfare, but anyway, very likely under the consideration that the caps could extract more data from users in order to better monetize vis-a-vis advertising those data. And this maybe it's not something that, if you consider the overall ecosystem, the overall policy is something that we want to, as a result. Anyway, it's something that we have to consider. And the last point on the transit fee is about vertical integration. And because one of the thing that the transit fee would do is create or change in a way the make or buy trade-off that large caps could have. So the trade-off between, as in industrial economics, the classical trade-off between buying a certain input or making it that input by your own, also entering in another market segment. Of course, if you put a price in a situation where there was not a price, you give incentive to move from buy, because when you have not a price, you buy for sure, to make. So you give incentive in a way to caps to vertically integrate. That's something, of course, that the policymaker, but also telcos should consider, because of course it will affect a lot the market structure, because in a way you have a substitutability, an increasing substitutability, because of course caps could start doing the ISP jobs, either investing directly, I don't know, or maybe using the pro-competitive access regulation, so accessing the incumbent network. And so in this way, there would be a level playing field, because they would pay either an access fee or do direct investment. But it would be a scenario in which ISP would face direct competition vis-a-vis vertically integrated content application provider. And this could be interesting to reflect on that for two reasons. First of all, of course, they would increase a lot the competition in the market. So going toward a different direction of the one softening the regulation that we were talking before. First of all, also because when you have, for example, an ads model, it's something that I derived from the Julien model that I mentioned before. Caps could efficiently monetize users by lowering the access charge and choosing the profit maximized at the level. So they have a lot of, and that could be, first of all, could be not a predatory pricing, because of course it's rational, it's efficient, because you have here also kind of two-sided the market. By the way, you maximize the overall profit, and also it's also efficient according to the model of Julien. So that's that for saying that in an integrated scenario, caps would be very, very difficult competitors for ISP in the market. And the other thing that is interesting, as let's say as a scenario, of course, extreme scenario, but it's nice to reflect on scenarios when you should reflect on scenarios when you make some policy choice. It's that a vertically integrated cap could think to distribute its masthead content only via its own network, because another asymmetry of net neutrality regulation that it's one way, so does not allow, at least for as I'm reading the open internet regulation, so does prohibit discrimination between for ISP on different contents, but does not say anything about a content application provider choosing only one ISP to distribute its content. There could be something, it depends how you interpret that, on the DMA, Digital Market Act, in the Article 6, Paragraph 6, about the point of not discriminating ISP of gatekeepers, but still you have to interpret that, because that was mainly based on the Apple scenario rather than on content application provider. But in any case, in this scenario, you have a special responsibility given by the antitrust law that, of course, prohibit an abusive leverage on market power. So if you have market power, you have the must-have content you cannot leverage in the ISP market. But of course, this is in this you have to give access to your must-have content, to your kind of access a essential facility. But the old case law is that this is you have to give access to the content in exchange of the payment. So of course, this, if you think at this extreme scenario, it's a complete overturn of the situation. So where there should be the ISP paying for the content rather than the CAPS paying ISP to deliver the content. So
Antonio,
that's of course.
Antonio, if I can
Yes.
stop you here because we should go. I would like also to have some.
Yes, I can go on. Sorry, I can go on later.
No, I would like
I
to
have
give
just one slide on the consultation, but that's pretty much everything.
In any case, I would like to give everyone the opportunity to kind of add something in the second round. If this is fine with you, I'm sorry if I had to interrupt, but I want to keep a level playing field for all the speakers in this panel as well. So first, let me just mention that in the Q&A part, there have been some questions from the audience, and William has kindly provided very rich answer. But Scott, if you want to have a look at that, and if you want to comment to the public, please feel free to do so. But before that, if you also want to comment on what other speakers have said as well, feel free to do so. Maybe I will just share some basic observations based on what you have said so far. It seems to me that we all agree that there needs to be a market failure, and maybe we don't necessarily agree about whether there is one. And in order to understand whether there is this market failure, we need better information and measurement capabilities. And as William has mentioned, that actually leads me to this question: is this exploratory consultation the right tool, the right exercise to gather this evidence? Because companies that will reply do not have to provide correct data, they do not have to provide data. And are we actually losing time with this exercise that the Commission is carrying out right now? That's one. And second, William has mentioned also that we need to have in the paper that I really recommend, and we have posted a link to this paper, that the internet ecosystem has changed, and in order to understand the real challenges for the sector, we need to understand holistically how this sector has changed. Now, if we have to understand how the sector has evolved, do we also need to have a holistic understanding of regulatory responses that have been adopted, that are in the process of being adopted? So what is the holistic impact of regulations like DMA, GDPR, Data Governance Act, and possibly anything that can come out of this for sure public consultation? I don't think it's necessarily that simple. And last but not least, if the sector is moving more towards the edge, my question would be, is the current framework that we have adequate to assess more network sharing, or in any case, other potential problems that might emerge from moving more towards the edge? So I will leave that with you, and feel free to either comment on my questions or to comment on what other speakers have said. So maybe I will start with Scott, you again.
Sure, thanks. Okay, well, there's an awful lot here. Let me focus on a couple of the points that you raised. Certainly on the first one, as far as whether the consultation will help, I think there was room for consultation. I'm not convinced that this one really is going to do very much. Whether that loses valuable time, I'm not sure, because of course that also depends on whether you think there was a problem that desperately needs solving. If not, then maybe loss of time isn't such a big concern either. But let me come to your next point and spend a minute or two on it. That's the relationship between this initiative and all of the others, including net neutrality. So on a couple of the initiatives that the Commission came out with during the last legislative term, I would put net neutrality here somewhat in the same boat as GDPR. There were political decisions that were reached, and I mean, so, okay, they're political decisions, they're valid political decisions as far as they go. But in both cases, we have legislation that was pretty far reaching. And if you look at some of my writings, you would see that they're more far reaching than I would have chosen in a couple of respects. That doesn't necessarily mean that they're wrong, but it means that there were trade-offs taken between protecting consumer rights versus economic welfare in a broader sense, where I probably would have chosen a somewhat less restrictive approach. In the case of net neutrality, you somewhat see this in the consultation that the UK is currently holding. Professor Manganelli pointed this out in his slides as well. I think he didn't get to it. So, here a slightly less stringent approach, a slightly more flexible approach might have been good. In the specific case of net neutrality, though, I would make the point, a lot has been said about conflict with the principles of net neutrality. You have to really distinguish between the principles of net neutrality written large and what the Act actually does. 99% of what's in the Act is really governing relationship between ISPs and consumers. It's not really dealing with the whole question of caps or the relationship between ISPs, among ISPs. So it's dealing with a different problem. Now, on your broader question about DMA, DSA, and we could add to that the Data Act, the Artificial Intelligence Act, all of the things coming down the pike. I've been troubled for quite a while. I actually held a public workshop on this through one of the other hats I wear, Bruegel, on the concern that we've got so many different things coming down the pike. Trying to ensure consistency among them is very challenging. And I think it's not adequately dealt with in the current instruments. You have examples in a couple of the member states. You have it in the Netherlands and the UK, where they try to create maybe non-regulatory bodies where the regulators just get together and talk to each other. If you look at Article 40 of the DMA, you see a little bit of this as well. But basically, the risk of conflicts among all of the different legislative instruments, both those that have just been enacted like DMA, DSA, and those coming down the pike, they mostly don't deal with this. And I think it's a problem. And also the risk of conflicts with existing measures like GDPR. There's a lot of overlap among all of these bits and pieces. There may be too many moving parts here for people to really keep track of the interactions. That to me is a real risk. And with that, why don't we hand over to the other panelists?
Thank you so much, William. Maybe your turn.
Yeah, really quickly, you said, that you said the panel all agreed that market failure needs to be shown before you justify a movement. That's what economists always say. And, mostly I agree that, especially if I'm in a room with pinhead economists. But, what we're really talking about is policy making. One of the key things that industrial policy makes is they have industrial policies. And what is a market failure? Is sort of, you want to achieve certain things. You want to create new kind of market opportunities. The instruments you consider, if they're going to interfere with the market, then you have to consider how they may actually cause failures or maybe a better response, or there may be alternatives. So that's sort of thinking about that. In the net neutrality regulation, I think one of the things we really have to think about is how this relates to the rethink of competition policy. And I thought for a very long time that the demarcation of mergers, for example, into vertical and horizontal mergers was just a mess, didn't work. It was what ruined any hope, in my view, of the implementation of the telecommunications redesign that took place in the US back in 1996. And that process of thinking through that is really, really important. And when I talk about things like network sharing agreements, and especially active network sharing agreements, we have to be really careful as we go forward to thinking about the net neutrality and how we do that. There was a comment in the chat about, was net neutrality, that was a failure. I think David Geary suggested that. And then you said, we can't get away from it. I'm not convinced, for example, in the US context, that it really was a failure to raise the question, or that what happened in the US with what we call the Open Internet Order was actually bad regulation. But all regulation is always flawed. It can always be better. We, as trying to contribute, are always trying to make it be better. But we ought to be thinking about what the issue is in terms of what the possible is. So I think in terms of going forward with this, and I'll be really interested in Scott Marcus's report that's coming out, I guess, the end of the month on net neutrality. I hope that people take that seriously, because knowing Scott, I'm sure it will provide a lot of useful information in the debate. But we're really gonna have to think about that. And one last point was Professor Knipes put in here that the 5G IoT future is a good he suggested that the future role of 5G based Internet of Things is something we ought to be thinking about. Well, there's lots of examples of that. That's certainly one of them. And I don't think, if you ask that question, how does this survey respond to a world where people are trying to do Internet of Things? I don't think you'll say that this survey is the best survey or going to get you the best data. Mostly what it's going to do is hopefully get people interested, because everybody who's interested ought to submit opinions, and it'll be like a temperature testing. But it certainly can't be either the basis for of how they'll make decisions in this space, or the end of it. So let me end there and pass it on to the next person.
Thank you so much, Giuseppe.
Yes, I'm not going to spend other words on the market failure framework. I'm pretty interested in in what has been raised about the interconnection between these so many regulatory intervention that we are witnessing in Europe in the last years. I'm even unable to remember all these interventions. Scott tried, and that's, let's say, very quickly related to the very last slide that I would like to share before, that is about the European strategy. I mean, Europe is setting and celebrating itself as a leader in regulation. That's it. We are defining ourselves as a leader in regulation. The problem is that we all know that innovation cannot deliver through regulation. And we are suffering in terms of a decline. And the very message that comes from, even from EU Commissioner, is that we need the fair share because we need to become a digital leadership. To get the digital leadership. I don't know how it is supposed to achieve this position just taxing other player that has been successful in a specific market. This is not something that is going to fill European gap. And as I tried to mention before, actually, this is the same answer that we deliver when it comes to audiovisual market and publishing industry. So we know that the digital transformation is going to disrupt player and market, is delivering new business model, but we cannot be concerned just to protect legacy player, because we cannot and we will not deliver competition, innovation, and digital transformation just because we are writing down regulation that we are well aware that are already updated. Because we are discussing about net neutrality. Net neutrality has been released 8 years ago, not 80 years ago. And we are already sharing the fact that caps player were already in place 8 years ago. We suffer of regulatory myopia, of a limited foresight, but still we are delivering so many regulations in fields that we are not able to understand where they are going. So we will face and will deal continuously with unintended consequences, as Scott mentioned about GDPR, but we will have other unintended consequences when it comes to DMA, data hack, and so on and so forth. I'm afraid of.
Thank you so much. And Antonio, considering that I had to interrupt you earlier, for which I'm very sorry, I wanted to ask whether you would like to finish what you've been saying earlier.
Yes, but it's very much in context of with what you asked, so I can go on. But it's sorry, it was my mistake. I apologize for being too long. And I agree with Giuseppe with that. But the point that is the Europe has always been a regulatory champion, I'll say, also when regulating the other markets. So the point is that. Now it's unavoidable to have an holistic approach to regulation. So to consider the entire ecosystem when you set regulation, when you consider old regulation, when you set new regulations. So that's how, in my view, this exploratory consultation, which might have, as Scott rightly said, some pitfalls, some bias, but still it's could be interesting, could be a good exercise to first of all defining the extended ecosystem. So what we want to regulate, where all these policies want to converge. And so in a way, for example, the questions in which the Commission is asking about the investment, what are the relevant investment, what are the players that should be involved and should be considered in the remit of this ecosystem in order to, in a way, to rethink a regulation that could be without pitfalls, without unintended consequences. Because it's unavoidable, I agree with Giuseppe, if you regulate bits and pieces in different timing and with different approaches, of course, there are a lot of unintended consequences, which the Commission is now trying to minimize by centralizing all the enforcement. So a way to avoid unintended consequences if you have one enforcer of all these pieces of legislation centralized, you might have less unintended consequences. But still, it's not, in a way, it's not always, not necessarily good to have always a centralization, and still you could have unintended consequences. So the point is to define the ecosystem, the extent of the ecosystem, considering all the investment, all the players that should be involved, considering the contribution to the ecosystem that all the players are giving, and also considering the positive externalities, both at industry level and societal level, that all the players, all different players have giving. And the last point is that, of course, some of the solutions softening on one side or increasing the other side, all possible solutions that could be considered, could be assessed. So assessing, once you have defined the ecosystem, assessing the intersection of different regulatory frameworks existing, and also the need of altering those frameworks, also to make more internally coherent each other, and how to do that. And so those possible solutions, some that are the softening on one side, tightening of regulation on the other side, and another solution that the consultation is in a way proposing, which is not has been given too much attention in the debate, because it's let's say an intermediate solution. And now, as you mentioned, the debate is very polarized, so that's not a solution that nobody prefer, but another solution that is there underlying, and the contribution to a new investment funds, or in alternative, some network investment, a co-investment obligation. That's something that is also there, which is not getting so much attention, because I guess because at this stage the debate is very polarized, and hopefully, and I think so, in the future will be a bit more of converging on some position.
Thank you so much, Antonio. So exactly because we want to create more convergence between opposing views, in the second panel that will follow after the 15 minutes break, we will have first 5 speakers who come mostly from the industry. But the second session will be split into 2 parts. So in the first part, we will hear their positions and their responses to what we have heard in the first panel. And then we will have a debate between the speakers of both panels. So I hope that you will stay with us for the second part. And at this point, I would actually suggest that because we wanted to have a takeaway message from the speakers of this panel, but maybe we can have that from all of them together at the end of the event. And in order to keep our participants busy, I'm going to launch a poll question, a poll quiz right now. So you will have 15 minutes to think about the answers that you want to provide, and we will see you back at 4:45. So in 13 minutes, enjoy the break, and thank you all for now.